Today's Wednesday, April 16th, 2025, and this is the Daily Voyage's first IMST update. So typically we guys, look over the MSTY fund, but today thought I'd go over Bitwise's new MSTR Options Income Strategy ETF. So as you guys can see, the current price of the share is $50.92, which is very, very close to its current net asset value per share. The fund currently has $24.77 million under management, and there's roughly 380,000 shares outstanding. So when we divide the assets under management with the total shares, and irrespective of different fees and all that, the premium that we currently have on each share is just under 1%, right? So we're paying about 2/3% extra more than what they actually are owning. So compared to MSTR's premium, right, guys, this is super, super, super conservative. And in fact, it's kind of something that you shouldn't really consider when you're buying this fund. It's typically very close to their NAV. The fund's expense ratio is also less than 1%, including other miscellaneous expenses. It's roughly 0.99%. Something that I should include is their treasury bill allocation. The amount of interest that they make on this is more than enough to cover the expense ratio, and also get Jeff and the team some Joe's steak and whatnot, because yeah, right. If you just take a look, I mean, they have about like $21 million in treasury bills. So, that's going to pay off a few percent. It's going to completely cover the expense ratio for us. And that's also not something for us to worry about as investors. So this fund came out. It's been just about 15 days now. It came out on the 1st of April, and it was, I think, ready for trade on the 2nd, if I'm not mistaken. In terms of the fund description, the Bitwise MSTR Option Income Strategy ETF, as we know, IMST, it's an actively managed ETF, and they provide, or they at least seek to provide, income, but they also want to provide exposure to the share price of MSTR. So there's a way that they're doing all of this, but it's essentially employing synthetic covered calls on synthetic options. So the way that I can kind of explain this to you guys is, for example, down here, we can see that for June of 2025, they have this long call, and they also have an equal amount of contracts with the same strike in short puts. So this right here in combination is what we can call a synthetic position. And this position that the fund is holding, as you can see, is very capital efficient, right? We're only using a little bit of the money for these funds, for these options here. And this synthetic option will actually mimic the underlying movement of MSTR. So the question is, right, if all that cash is sitting in the treasury bills and we've only have a little bit of cash for our synthetic positions, how do we make money, right? How does this fund make any money? So what they do is we can take a look to see that they have, as we mentioned, right, they have about $21 million in treasury bills. Then you can see they have these 3 short call positions, all for the April 17th expiry. And you can see they have minus 281, minus 495, and minus 15. So they have about this much in short calls in turn for their synthetics, right? We can see their 310 synthetic position here, right? So we can see that the fund's options positions include long call options, right? The June 2025 strike, the 310 strike, June 2025 expiry, and the short put options, right? In June 2025, the 310 strike. So these create the synthetic position, as we mentioned, and the short calls, those are what generate the income, right? So here we can see that they have the 335, 340, and 355 calls sold short. So up until MSTR reaches this price on this date, we will capture the upside there. But let's say MSTR goes all the way above 355 here. Then it's possible that we are capped, right? Not possible, we will be capped, right? Very significantly. In terms of IMST versus MSTR performance, just to get a note or an idea of how the underlying is doing versus this security on top, we can kind of see that IMST outperforms and underperforms quite evenly, right? It's only been out for 15 days, you guys. So currently, you can see that they've both performed roughly evenly. And it's not really something that we can control, or it's not something that we should really be looking forward to, right? You have to understand the purpose of the fund. And the purpose is to sell out the money calls roughly in order to capture a lot of upside and a little bit less income than MSTY does, right? In comparison, you guys will notice that MSTY is selling calls at the money or very close to out of the money. So they will capture a lot of income, but they might not capture as much upside as IMST captures. And there's also the possibility there where the dividends that IMST is providing you, when you reinvest those, because the upside is not truly capped a lot, you don't really know, right? After a few years, it's quite possible that your IMST position is outperforming the underlying itself. Now, this would only happen, of course, if there aren't omega candles, right? One omega candle will probably stunt this one IMST fund quite a bit. But, right, how often will you get those, right? The proportion of those days versus the normal boring days, right? You've got to think about that and perhaps maybe consider opening positions in both IMST and IMSTY, along with obviously holding their underlying and underlying's underlying, right? You guys should definitely hold Bitcoin and MSTR if that's what you're looking forward to do. But in terms of risk, fund has slightly less risk than owning the underlying itself. In my opinion, why? Because they're generating income regardless, right? Those few days where you won't capture the 30% upside, right? Those particularly few days, you will be gaining income on this fund on every other one of those days, right? So like I said, guys, we need to figure out a balance of what works for you. This includes understanding how much income you truly need. If you don't need income as much, then MSTY might not be the best option. Instead, IMST might be a good option. Truly, because as I mentioned, it's possible, very possible, and kind of quite likely that this outperforms the underlying over certain periods of time, right? Now, in terms of timing the market, I don't really suggest that, and I don't think either of us can do that as well as we think we could. So in terms of holding these things, in my opinion, IMST complements MSTR, complements MSTY. They're three different products, right? So one needs to consider their kind of minute differences and then evaluate their next steps forward. Guys, so we can take a look at the detailed fund information down below. You guys can look at these details and do with this information what you will. Thought I'd just provide this to you guys for once. And as we can see, the management team, our favorite guy, man, Jeffrey Park, he is the portfolio manager here, head of Alpha Strategies, and he's partnered with Jennifer Thornton, head of Index Fund Portfolio Management over there, and Daniela Padilla, portfolio manager, and last but definitely not least, our quantitative investment analyst for this fund is Gayatri Chowdhury. Truly appreciate everyone's work. This fund would not be here without them, and it's always interesting to see new securities being built on top of the Bitcoin infrastructure and the Bitcoin community, and quite frankly, it's great to see that different companies and different entities and different firms are taking a look at this as well. Bitcoin's on the horizon, guys. Key considerations, definitely. The potential benefits of this fund, right, specifically as we mentioned, is, they're targeting 10 to 12% annually is what I'm seeing, right, based on their yield. It will not be anywhere roughly like MSTY, as we can see. But MSTR's upside, it won't be capped with this fund. So if you're not looking to generate income and pay tax on that, this might be a better strategy for you. As we know, IMST runs on a synthetic exposure, right? This is way more capital efficient than you'd think, right? Instead of using all the money for buying the underlying, they're actually able to mimic the underlying movement just with the synthetic exposure, right? And this actual money is actually paying off your expense ratio. And on top of that, it's giving you a few pennies per share per month. Guarantee you that. So next off, let's look into the professional management, right? I don't know about you guys, but I think I have other things to do with my time versus trading every single option every single day. And quite particularly, I am not a professional options trader. I think I trust the team over at Bitwise way more. And I know that it's only been out for 15 days, but the company itself has been around for a while. Bitwise has other products out. They've been performing for years. And I definitely don't think, these guys are going to generate alpha on the Bitcoin benchmark. Don't you guys doubt that? Yeah. So moreover, in terms of the potential benefits, guys, this is indirect Bitcoin exposure, right? In my eyes, it's kind of better off, right? It's not Bitcoin on the chain, and it's definitely not Bitcoin in the same sense. But for someone who's looking to gain exposure to the movement of Bitcoin, this is a great opportunity. Please take a look at the fund details yourself in order to figure out if this is a good investment strategy for you. As we mentioned, right, the potential tax efficiency on this fund is just great, right? We would not be able to mimic that capital efficiency as individual investors. You need a lot of capital, guys. And key risks. Frankly, guys, I have to let you guys know, right? There is limited track record for this fund specifically. But as we've mentioned, right, Bitwise has established ETF products. You guys should look at them. And in terms of the performance, it's obviously dependent on MSTR stock movements. So there needs to be a fundamental understanding of MSTR and strategy itself before one is looking into these kinds of funds, right? You can't just be buying random income options ETFs without understanding what's going to go on, because sure, you'll get income, but is your capital going to be preserved, right? That's a huge question. So we know this, and we also know that there's capped upside during strong MSTR rallies, but we also know that there's full exposure to the downside risk, right? I mean, essentially, guys, there's slight differences between IMST, and between the other potential underlying ETFs and the underlying in general. You can do these options yourself, or you can just let these guys handle it for you, right? The IMST ETF website, it's also regularly updated with the latest information based off what I've seen, and I've been keeping an eye on the fund the last few days. But yeah, I definitely really wanted to make this video for you guys, give you guys an explanation thoroughly on how the fund's doing. I'll share the Claude link below in the X comments, so you guys can actually open this thing up and take a look yourself, because there's a lot to look at and a lot to think about, because we need to set up ourselves in a way where a few years down the line, right, we'll thank ourselves or our families or our relatives and whoever we are looking to take care of, right? They'll be very appreciative of the efforts we put in here. So yeah, guys, I think if you guys have any further questions besides the fund, let me know. In terms of tax, I'd like to add that there will be a return of capital versus a return on capital segment noticed in their dividend payouts. In their filings and in their announcements, they'll note how much of your dividend was a return of capital versus return on capital. Difference being, return of capital is the amount of money you've invested. They might slightly be paying you back your own money. This is actually in turn lowering your average cost. Return on capital is actually profits that they've generated through the options income, right? This is something that you would pay dividend tax on. This is what you would pay your income tax on. Now, the return on and of capital ratio for MSTY, based on what I've seen, is 50-50. So what that means is if you get $1,000 dividend, you're paying taxes on $500 as income, right? So if your tax is 30%, right, you'll pay 30% of the 500, which is like 150. So on the $1,000, you'll pay a relative cost of 15%, right? Because it's 50-50, your tax is roughly split in half. Now for this specific fund, we don't know, right? We need to give it some time, understand how the fund's working. But yeah, until then, I'll keep you guys updated both on this and the other income options ETFs. Take it easy, guys.